So how does a conventional loan work? Well, lenders make conventional loans directly to consumers, and as long as the loan meets Fannie Mae or Freddie Mac's requirements and guidelines, the GSEs, government-sponsored enterprises, purchase the loan. These loans are then packaged into securities and then sold to investors for their portfolios, just like any other investment. As a result, the lender's freed up to make more loans, and voila. Highlights of the conventional loan are as follows. Loan purposes could be purchase, refinance, or even taking cash out in a refinance. And it can be for different types of loan types: owner-occupied, second home, and investment property. The different property types include single-family residences, which are 1 to 4 family units, PUDs, such as townhouses or single families that are part of a planned unit development, condos, manufactured, and modular homes. There are different low down payment programs that can be used with a conventional loan, and you can do as little as 3% down if you're a first-time home buyer. Standard down payment are 5%, 10%, 15%. Anything less than 20% down though, you're going to have mortgage insurance. When it comes to credit requirements, it's really ideal for people with better FICO scores, but you can really go down to as little as maybe 620 FICO score depending on the lender. And it's also great for investors. They can go up to 10 financed properties. So if you can't quite qualify, but you got somebody who can co-borrow with you, Freddie Mac has a great program that allows you to blend your income and their income together as a non-occupying co-borrower. You can also use gift funds for your down payment. There is no requirement as to how much you've got to come in with your own money, as long as you're able to put that 5% down, and gifts are not allowed for investors. So who's eligible? You know, everybody's eligible for this loan, but it's best for people with moderate to strong credit histories, from first-time home buyers to seasoned investors. There are no income limitation for qualifying borrowers. Asset requirements, reserves can be required, which are money that needs to be set aside for principal, interest, taxes, and insurance for 1, 2 unit, 3 to 4 unit properties, depending on if you're an investor or not. There are no reserve requirements if you're an owner-occupied typically. After foreclosure, the rules are a little bit different. It's 7 years after foreclosure before you can use a conventional loan. It's 4 years after a short sale. It's 4 years after a Chapter 7 bankruptcy, and for a Chapter 13 bankruptcy, 2 years after dismissal or 4 years after discharge. Those are the main highlights of the conventional loan. Thanks for joining me. Please check out the next video in this series. Thanks for watching.